Hi guys, welcome back to another YouTube video, and something quite interesting. The start of my just a little mini series to help any sort of aspiring startup trader or investor. I'm going to go through the real basics of investing really, and I'm going to do maybe a 4 to 6 part sort of series just explaining the real startup, bare bones, basic sort of instruments to investing really, and hopefully it will help somebody out there. Hopefully it might inspire somebody to start investing. Hopefully it might encourage people to start investing, and possibly trading. But for the first video, as you've probably seen in the title, is going to be the difference between the two, the difference between trading and investing. So they're quite different, although the basics are the same in terms of what you're aiming to do. It's obviously to make money, right? But the way you go about it is just a little bit different. So I'm going to go through that with you today. There'll be really nice, quick, short videos, really just basic stuff, nothing too complicated, so you can just quickly smash through them. I don't know, 5-6 minutes maybe. I'm going to try to keep it to get a good outline, and it might help you with your research and what you're doing and things like that. So I'm going to go straight into it, and I'm going to go straight in with trading first. So the difference between the two, I get asked this a lot. In fact, my fiance still doesn't really know the difference, I don't think. So if I say, so we've got our own little investment account, which we put little bits into each month, and it will just, little nest egg, it will just sit there, and it scares her to death. So she thinks I'm trading it, I'm going to lose it all, it's all gonna, she hears these horror stories. So the difference between trading, which I do as well, and investing, which I do as well. So I'll run you through the two things. I'm on IG's website here that you can see in the background. Obviously I'm down in the corner here, but I'm just going to show you the accounts that you might look to use as well. I'm not affiliated with IG. If you open an IG account, I'll put a link in the description below. I will get a kickback, but I'm not affiliated by them in any way. I just use them, I like them. Ergonomically it works for me. I just prefer it. I've always used it as a platform. So let's get straight into it. So first things first, making money is the overall goal, whether you're investing or you're trading. I'm going to talk to you about trading first. So the main things about trading, a lot of people online will suggest that it's all down to time frame, and traders will typically be days, weeks or months in a position, and the whole goal is to buy and sell at different levels, whether you're buying and selling long, selling short. The whole goal is basically to make money in the short term. I don't believe it's fully down to time frames. I think for me it's time that you're in the market, but also the risk involved as well. So I'll run you through these accounts that you would typically use for a trading account, whether you're trading currency markets, stocks, commodities, precious metals, gold, silver, and I'll quickly run you through. That's buzzing. These accounts. I think you can just about see this here from where I am cut off. So the two main accounts are spread betting and CFD accounts, which are highly leveraged. You can see at the top here, if you follow the cursor here, spread bets and CFD accounts are a complex instrument as well, will come with high risk, and then they give you a warning of how many investors, retail investors, traders, lose money. So the risk involved in trading is far greater, certainly from my point of view, than if you were to invest money, because they're high leveraged accounts, which basically means, in layman's terms, if you put 100 quid in, pounds, dollars for the American audience, the broker will then leverage your money and they'll allow you to play with 1,000 or 2,000 or whatever it might be, whatever you leverage it up to, which comes as real high risk. The upshot is great because if it goes your way, the upside, you earn more money. It's leveraged, so therefore you actually take back a lot more. The downshot is if your trade goes south. Say you've got an account of £1,000 and you put £1,000 in, and the account's leveraged, and the broker then tops up to £20,000. If that goes south fast, you can end up in negative equity because it's highly leveraged. So you've got a little. So these are obviously key reasons you should be using IG. Part of their sales thing. Let's get that to the top of the screen so you can see these. One of them is never stay below zero. If your account balance goes negative, we'll bring it back to zero. So that's one of their selling points of using a highly leveraged account. But that's what you would use for trading typically, because you've got high returns but high risk. Okay. So it just makes it easier with the leveraged accounts to completely blow an account if you're not doing it right, if you haven't got the right procedures in place, stop losses to cut you out, and bits and pieces like that. And these aren't necessarily, you trade companies, you wouldn't necessarily believe in the company, you just think they're going to go down in price or go up in price based on your analysis of the chart analysis that a trader would do, your fundamental analysis, your indicators, your support and resistance lines, trend lines, things like that. So that's the basics of trading. High risk, leveraged accounts. You're just buying and selling at different prices and taking the difference basically. And it's usually short term, days, weeks, months. Leveraged account, and just higher risk. So this is what I use Awanda, as you may know from other videos, as my trading account. So high risk, highly leveraged, and then I use IG for my investment accounts. Let's go down to these now. So I'll talk about investing as well. Investing and stockbroking. So we've got a share dealing account. I think you can see that. Here we are. Share dealing account. That's what I've got. That is my account. We've got ISAs, we've got SIPs, and IG smart portfolios, whatever they are. So effectively, the outline of investing instead of trading is you're doing it long term. Some people believe if you buy into a company and sell it a year, 2 years later, you're trading. I think if you truly believe in the company, you've invested in that company. If things change and suddenly they're not morally in tune with yourself and you don't want to be part of that company anymore, you've still invested in it, you're just selling out of that particular company. So it's usually done over the long term, years and years, 2, 5, 10, 20, 30, 40, 50 years. If you look at Warren Buffett, he's been investing in companies for 60, 70 years or something, or longer. He's 89 and he started when he was 11. So long time. All right, so it's longer term. You typically wouldn't use a leveraged account. So whatever you put in, that's that. If you put £1,000 on a company, that company goes to zero. You've lost your £1,000, but you haven't got that high risk of your account going into negative equity. So it's lower risk. You typically invest in a company that you truly believe in. Some great companies out there, you know them all, the Amazons, the Apples, the Teslas now, the companies that you're happy to hold for the long term, and you actually want to physically buy into that company. So that's more investing. It's lower risk. You can just buy and hold forever. The only way you're going to lose your money is if the company goes bust and it goes to zero. So if you're investing in, here we go, let's go on a limb here. If you invest in a company like Apple, McDonald's, Coca-Cola, Disney, Pepsi is one as well. There's loads of Procter and Gamble and 3M and all these huge companies that have been around for hundreds of years, in some cases, that have always done really well, always turned a profit. Balance sheet has always been fantastic. Have weathered every storm out there. You're investing in a good quality company. long and short of it is, if you do it right and you invest in the right companies like a lot of people do, you can hold that forever and ever and ever, and it's just typically going to do, which way is the camera face? One thing. It's going to go up and up and up and up. I am more a dividend investor, so I would aim for companies that pay a reasonable dividend yield, so they will kick back to me a certain amount of money just for the pleasure of holding having them as a holding. So for example, Apple paid out their dividends yesterday. I hold 6 Apple shares. I got paid, I think it was £3.17 or something. So, like, it's not a lot. It's a very low dividend. Yeah, £3.17 for my 6 shares. Very low dividend yield, Apple, but they're paying me to say thank you for owning a part of their company. I'm not trading their company to and fro on spread betting or CFD accounts. I've bought into the company, believe in the company, I'm holding the company, and they've kicked back to me to say thank you. So I'm really a dividend investor. You've got a few different types. You've got value investors for companies that are just high values that they think are, good quality long-term holdings. Growth investors, Teslas, Apple to a degree, companies that you think have got real high growth potential. During lockdown in the UK, I bought Netflix, Shopify, Facebook, Snap, lots of companies that if you're typically at home and you can't go out, you're going to be using these products, and I saw that as a growth opportunity. So you've got different types of investors within the field of investing. So just to wrap up, that we've got high risk and lower time frames in trading. You do it on CFD accounts and spread betting accounts. They're leveraged. You are going to, so they're highly leveraged, and you know there's big risks with it. They've even got to supply you with a percentage of retail traders that retail traders that lose money. Just as a warning, investing you can do from as little as, I think if you've got a trading 212 account, 0 commission, you can trade from as little as 10 quid, a month, and build up from there, and there's lower risk of losing your money. So I'm doing both. I'm big on both. I'm going to be building up the Wonder account, which is my spread betting account, which is leveraged, and I also have a reasonable holding in my share dealing account. So look, I hope that's been helpful. Hopefully that's been short enough to keep you here and interested. And as I said, I'm going to start sort of one a week, maybe just kind of some bits and pieces that I do, how I invest, what I invest in. I'll do maybe how to invest your first £1,000 for high dividend income, and I'll reveal some companies that I would be going into to attract that kind of yield, and bits and pieces like that. So hope this has been useful. Like the video if it has, subscribe, because obviously I'll be doing more of these, and I'll have it as a little mini series and in its own little playlist on YouTube. So as I said, hope that's been helpful. Hope that it's encouraged one or two of you to start either trading or investing, and I'll catch you all in the next video. See you later.